As a business owner, navigating the intricate landscape of financial health can often feel like a daunting task. You're constantly juggling numbers, assessing risks, and making strategic decisions that can either propel your business forward or hold it back. One of the most critical aspects of this financial puzzle is understanding your assets, particularly the concept of unencumbered assets. So, let's dive into what unencumbered assets are, why they matter, and how they can significantly impact your business's ability to attract investors and secure financing. First off, what exactly do we mean by unencumbered assets? In simple terms, unencumbered assets are those that you own outright, free from any legal or financial claims. Think of them as your financial safety net. These are the assets that can be sold, used, or leveraged without any strings attached. Imagine you have a piece of property or cash in the bank that isn't tied up in loans or other obligations. That's an unencumbered asset. Now, why should you care about unencumbered assets? Well, having these assets gives you flexibility and financial stability. Let's say your business runs into a rough patch. Having unencumbered assets allows you to liquidate them quickly to meet your financial obligations. Conversely, if all your assets are encumbered, you might find yourself in a tight spot with limited options to pay your bills. It's all about maintaining that financial freedom and protecting yourself from unforeseen circumstances. Historically, the importance of unencumbered assets hasn't always been fully appreciated. Many businesses didn't prioritize maintaining financial freedom, but over time, the landscape has changed. Today, unencumbered assets are a key indicator of financial health. Lenders and investors scrutinize these assets to gauge a business's creditworthiness. If you have a solid amount of unencumbered assets, it signals to potential investors that you're financially stable and capable of meeting your obligations. Let's look at some real-world examples to illustrate how unencumbered assets can be a game changer for businesses. Take XYZ Company, for instance. They're looking to secure a loan to fund a new project. The bank requires collateral, and fortunately, XYZ Company has $5 million worth of unencumbered assets. This includes $2 million in cash and $3 million in securities. With these assets free from any claims, the bank feels confident approving the loan, allowing XYZ Company to pursue its growth strategy. Now, let's consider John, a small business owner with a boutique hotel. He's approached by investors who want to provide funding for expansion, but they require collateral. Initially, John thought he could use his existing property, but it's all tied up in loans. Instead, he turns to his unencumbered assets, $100,000 in cash and marketable securities. The investors assess the value, and it's enough to secure the loan. This allows John to grow his business without risking his existing property. Then there's ABC Corporation, a manufacturing company with a solid track record. They want to purchase a new facility, but need a loan. They have $3 million in unencumbered assets, which the bank uses as collateral to approve the loan. This transaction not only facilitates the purchase, but also signifies the trust the bank has in ABC Corporation's financial health. However, it's essential to recognize that having too many unencumbered assets isn't always a blessing. There's something called opportunity cost. If your business is sitting on a pile of cash instead of investing it in growth opportunities, like new equipment or expanding your workforce, you might be missing out on significant revenue potential. Additionally, holding too many unencumbered assets can lead to lower returns on investment. For example, if you're keeping a large amount of cash in low yield accounts, you could be losing out on higher returns elsewhere. Furthermore, having an excess of unencumbered assets can increase the risk of theft or fraud. The more cash or securities you have lying around, the more vulnerable you might be to internal or external threats. It's a balancing act, ensuring you have enough unencumbered assets to protect your business while also leveraging them effectively for growth. So, how can you maximize your unencumbered assets? Start by identifying them. Review your balance sheet and look for assets free from any liens or obligations. Develop a strategy for utilizing these assets to enhance your financial health. For instance, consider using them as collateral for loans that can help you invest in new opportunities. Regularly monitor your assets and ensure they're adequately protected from risks like theft or damage. As we look to the future, the importance of unencumbered assets is only expected to grow. In the wake of economic uncertainties, businesses are emphasizing liquidity more than ever. Unencumbered assets can provide that much needed cushion during tough times. Additionally, advancements in technology, such as blockchain, may enhance how we track and manage these assets, making them even more valuable. In conclusion, understanding unencumbered assets is crucial for any business owner. They represent not just financial security, but also a pathway to growth and opportunity. By keeping a close eye on your unencumbered assets, you can make informed decisions that will benefit your business in the long run. Whether you're securing financing or attracting investors, having a solid foundation of unencumbered assets can set you on the path to success. So, take the time to assess your financial health and leverage those unencumbered assets to their fullest potential. Your future self will thank you.